Let's bring in Tesla bull Gene Munster, managing partner at Deepwater Asset Management. Gene, great to have you with us. How excited are you, if at all, about this, Tesla Model 2 or whatever you want to call it, this lowest end car that could be unveiled soon?
Scale 1 to 10, 9.5. This is a measurable outcome, a measurable development. We knew it's coming. We don't know the timing of it, but just to kind of put the context of the conversation. And ultimately, this is about selling units. It's about deliveries. And to increase deliveries, you need to increase your product line. They really have two products right now, Model Y, Model 3. They announced today that Model Y is the best-selling non-pickup truck in the U.S. Non-pickup truck means pickups sell more than the Model Y. That's the F-150. And I think there's an opportunity for Tesla. If you just take the step back here, Cybertruck's going to be coming out next year. That could be a nothing. It could be a grand slam. And then you put on that a lower priced vehicle that you're talking about. And then there's this other vehicle. I'm going to guess that it's probably something like a kind of a van, a Sprinter, like a Mercedes Sprinter like type of vehicle. Smaller market than the Model Y, but still kind of fills in this product gap. And they don't update their products very often, as they're very different than a typical car maker. So I'm optimistic about the long term here based on what's going to be more models coming out. And it's, yes, we're in a storm around the economy right now. But as soon as these products start coming out, I suspect investor optimism related to Tesla is going to shift to being more positive.
Gene, hold on. I want to get to Phil LeBeau again. He's got some more details from the meeting. Phil.
It just came out a couple of minutes ago, Melissa. A question from one of the shareholders was basically, why don't you do advertising? If you did advertising, you might be able to reach a larger audience and advance sales and advance the development of electric vehicles. Elon Musk kind of talked about it. He said, yeah, maybe. He goes, hey, I'm open to ideas. We will try advertising. We'll give it a shot. Now, does that mean that we expect a full campaign like you would see from a traditional automaker? I don't think so. But it is significant, Melissa, because they have never done any type of advertising. Let's see if this is just a comment that is made at an annual meeting or if there's follow through here and we actually do see some form of advertising for Teslas over the next couple of years.
Sounds like a comment made by the owner of Twitter, which relies on advertising. Phil, thank you. Phil LeBeau for keeping us posted. Gene, back to this here. Should we think about Tesla now as growth at all costs? I mean, is that the right sort of way that we're looking at it? Because that's what it sounds like, that whatever products they have, they don't really care about the profitability. They don't care about the margin. They want to get the units out there. That's what you made it sound like, too. Yeah,
I think Dan was mentioning that earlier on. I agree with that. I think that this is growth at all costs. This is not just an EV story. It's not just a Model 3 and Y. We talked about the other two products that are coming out. They led their investor commentary today to talk about Master Plan 3. There's going to be HVAC. That's a new product. Obviously, FSD, more solar products. And then he said optimist, and this is the kind of the eye-rolling comment. I think the head of the eye-rolling comment is that long-term optimists will create more value, be more of the valuation of Tesla. Obviously, this is this robotic that is just in its infancy right now. But all of those, when you put this whole piece together, what this is, it's growth. I mean, each of these products are going after big addressable markets. And I would just put that up against, and when the debate about investing in this is that put that lineup, even if 2 or 3 of those hit, put that line up against any other car makers, and I think that Tesla still stands above the rest when it comes to growth opportunities. It's going to be bumpy, but they're going after such big markets, and they got such a good lead. I suspect that the momentum is going to shift more positively in the quarters ahead.
Gene, do you think the market has become too fixated on that margin of 20% because they're so far ahead of the competition? Do you think that's where we should be fixated on the fact that even if it drops to 15%, they're still going to be way ahead of the other car makers? I think I know your answer, but why do you think the market attached itself to 20?
Markets typically looks 2-3 years out. In the case of Tesla, it's been looking the 1 quarter, 2 quarters out, focused on that number. If that number goes down, let's say it goes that 15% number, the stock's going to go down. I'm going to be wrong in the near term. But I think that eventually, I think what really separates, and this is what we do at Deepwater, is look for persistent growth. These are companies that grow longer for faster. And I think what really the opportunity around Tesla is to lean into whatever the margin is, if it's 8%, if it's 2%, But if they start capturing some of these markets, they are large, and large is an understatement. And I think that eventually the profitability is going to swing back. And they've shown they can do that in electric vehicles. I think they can do it in energy capture, and eventually, long shot here, but eventually around Optimus and robotics.